Now, what if I told you there was an ETF that offers a nice high starting yield and has offered investors around 12% per year as far as returns go since inception? This ETF is also pretty low beta and is also pretty tax friendly. Well, in this video, we're going to go over exactly which ETF I'm talking about, one of the larger ETF holdings in my long-term portfolio, and this ETF, in my opinion, is still pretty slept on. This ETF could especially be perfect as of right now while the market is so frothy, because this ETF does have some downside protection in case the market pulls back a little bit. Not to mention, through tons of different market conditions, this ETF has always prevailed and performed pretty well. So if you want to go through and see which ETF I'm talking about, well, then make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now the ETF I'm talking about is DIVO, or the Amplify CWP Enhanced Dividend Income ETF, an ETF that doesn't necessarily get as much love as it deserves, considering this ETF has been trading since late 2016 and has offered massive total returns since inception. Now, DIVO has been a staple in my long-term portfolio for several years now, has grown in price over time since I started buying it, but not only that, this ETF offers monthly income generation, which is much higher compared to the markets. But before we talk about total returns and all this ETF has to offer, let's understand how this ETF works and how it has offered such great total returns since inception. It says DIVO is designed to offer monthly income while providing high risk adjusted returns that correspond generally to the CWP Enhanced Dividend Income portfolio. DIVO seeks to provide gross annual income of approximately 2 to 3% from dividend income and around 2 to 4% from option premiums. It then says reasons to invest in a DIVO: 2 potential income streams. DIVO seeks income from dividend paying stocks and by opportunistically writing covered calls on those stocks. Number 2, professionally managed. Access a professionally managed dividend and option income investment strategy through the efficiency of an ETF. Now lastly, I talked about that this ETF is pretty low beta, seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. And I can confidently speak from experience the fact that DIVO has held up pretty well during broad-based market declines several times from when I've held onto it. Now, if you guys are interested in dividend funds, covered call funds, I'm positive you are going to find DIVO pretty interesting because DIVO only holds on to 23 holdings as of right now. It always holds on to around 23 different holdings, and then within the basket of holdings you can see tons of names within this, names that offer a little bit more dividends, names that offer a little bit more growth potential, a nice mix of both. But then along with that, at times DIVO will sell covered calls on individual names, so it's not like DIVO is utilizing an entire index like the S&P or the NASDAQ, but instead a curated basket of holdings, and then along with that, individual covered calls and individual names. Now this process has obviously worked out pretty well for DIVO. Since inception, we're talking 12.14% annualized percentage gain per year. The fund NAV's total return since inception, 166+%. Now on top of all that, DIVO does also offer monthly income. We're talking just shy of 5% yield here, so we're not getting into the ultra high yield landscape by any means, but still a 5% starting yield with some upside, which I'm going to share with you guys here in a second. A low beta portfolio that has offered 12% annualized gains. I mean, it doesn't really get much better than that. Now, even though I can't speak for every dividend investor out there, I absolutely love higher income ETFs that offer, let's say, 5% yield or more, but also have grown over time as far as price return goes. NAV decay, NAV erosion, price decay is one of the biggest enemies when it comes to high yielding stocks or ETFs, of course. And with DIVO, you can see as of right now, as I film the video, it's trading just under $43 per share, and it started trading back in 2016 at under $25 per share. Now, if you're somewhat of an investor that isn't necessarily sure if you want to have exposure to growth, or you're not necessarily sure if you want exposure to income, something like DIVO is honestly the perfect hybrid of both, offering around a 5% yield that pays out monthly. But on top of that, looking at the long-term chart, it's grown over time quite nicely. Now, as far as the amount of income you should be expecting to receive per share per month when it comes to DIVO, again, we're looking at just shy of 5% yield, but anywhere from 16-17 cents per share per month is more or less what's been paid out as of recent, and then a little while back, 14, 15, 16 cents per share per month. All in all, DIVO stays pretty consistent though with that around 5% distribution rate. Now, speaking of distributions, you guys are probably curious on how in the world DIVO's distributions are going to be taxed. This is becoming more and more of a thing, especially these days with so many of these new option income style ETFs coming out that do offer a ton of return of capital, which some investors, including myself, are definitely seeking. Now, it says as of the most recent payout, which was June 30th, 30th of 16.75 cents per share. It's anticipated that 70% of such dividend will be return of capital. Now, I think we're getting a little bit spoiled with the return of capital tax treatment for lots of distributions throughout the market these days with lots of these different option income style ETFs, because you guys are probably thinking to yourself or maybe asking yourself, why in the world is this not 100% return of capital? But the reality is that even with 70% return of capital and the rest of it being estimated net investment income burden, at least as of right now, the tax burden is still mostly deferred down the road because the majority of the ETF's distributions are return of capital. So DIVO offers exposure to some of the best names throughout the market, individually sells covered calls on those individual names. Along with that, offers some upside, some growth, around 5% distribution rate, monthly income that's relatively tax friendly. DIVO's total return is also very impressive, annualizing out around 12% per year. Now, DIVO is especially worth looking into, maybe adding to your watch list as of right now, in my opinion, while the market is so high up and so frothy, just because DIVO is one of those names that you can sort of set and forget in your portfolio. At least for me personally, that's what I do. Buying a few shares of DIVO here and there almost feels like you're buying into somewhat of like a bond fund, just because DIVO has been so stable over the years, relatively speaking. So now that we talked about and went over one of my favorite quote-unquote hybrid ETFs that does offer a ton of growth, a ton of income, all in one single vehicle, we talked about the fact that DIVO offers monthly income, tax efficiency at that, and is a very low volatility ETF on top of it. I lastly, most importantly, have a question for you guys down below. When it comes to DIVO or other low beta, sort of tried and true safe ETFs across the market, do you own shares of DIVO as of right now? Or if not, what other ETFs are very similar that I should look into next? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.